So this is a limited company sum which is come in October, November 2024 in your paper 22. If you carefully go through this sum, the first thing is related to errors. Okay, that means they have given you a draft profit and they ask you to arrive at a corrected profit. I hope are you with me? Okay. This profit for the year figure would be very important for you because from this profit, they ask you to make an SOCE. Now, here, one thing I want you to note over here is it's a very unusual type of sum, like a normal SOCE, but just a little twist. So, if you know your concepts properly, you can complete this sum in 15 minutes. Your target is 1 mark, 1 minute. Have the timeline with you handy. The moment you exceed your timeline, you're going to not complete your paper, and that's for sure. Okay, so this is something that is related to errors, and in all the variants, they have asked errors for all the October, November, and all the May, June in 2024. So let's go back a little to my errors. Okay, when I'm doing my errors and corrections, if you recall from your IGCSE, we have to calculate the corrected profit. If you remember, show the corrected profit. We had a rule in over there. What was the rule? I have draft profit that is already given to us. Okay. In that rule, we had if we have to do anything which includes, if in your rectification you have to do anything which includes expense debit or income debit, you're going to reduce the profit. The effect of this would be you reduce your profits. Okay, and you're going to subtract it from your draft profit. So when you're correcting it, in your correction, if anywhere you face a situation that your expenses are increasing or your income is reducing, expense debit means your expense is increasing or your income is reducing, you are going to subtract. I hope you're with me. And if you face a situation where it is expenses credit and income credit, okay, expense credit means expense is reducing and income is increasing. If you face any situation where you have to reduce the expense for correction or increase the income for correction, you're going to add to your profits. I hope you're with me. Then the second thing that you should remember and you should note over here is we always treat our closing inventory as we treat our closing inventory as income, okay? And we treat our opening inventory as expenses. What does this mean? If they say to us, your closing inventory was overstated, think logically. If they tell you your closing inventory was overstated, how would you think? Income is overstated. So to correct it, you have to reduce the income. If you have to reduce your income, that means you have to do income debit, so you're going to subtract it from your draft profit. Let's take one more example. Opening inventory overstated. Which is correct or wrong? So what will you do? You will reduce it. Okay? Yeah, you will reduce your expenses, so you'll add it to the profit. Expense is overstated. This is wrong, so you're going to reduce the expense. Reduce the expense means expense credit, so you're going to add to your profit. You have to think that way. Another thing that you always think of in errors when you have to do your statements is purchases means what? Purchase is an expense. So it is always debit. Purchase return is expense reduced. So it is always credit. Sales is credit. Sales return is income reduced, so it is debit. I hope you're with me. So these are the rules that you keep in mind when you do sums that is related to errors. Now what I would ask you is, my question number 2 tells me that I have a draft profit of 58,340 and these were the errors that I have made. Okay? They want you to find the corrected profit. If you're watching the video, pause and find the corrected profit. If you're not watching the video, I will pause for you. You all will find the corrected profit.
Which question?
The second one that we were doing. Okay? So our first adjustment was closing inventory is overstated. How do we think about it? Closing inventory is treated as income. So income was overstated. So we have to do income what? To rectify it. We have to do income debit. Income debit, expense debit. So you're going to reduce your profit. So from your draft profits, because of the first adjustment, you're going to reduce your profit by 2,800. I hope you're with me. Income was overstated. Credit was more. If I have to reduce my credit, debit it. The rule says income debit, expense debit, reduce your profit. Income credit, expense credit, increase your profits. I hope you're with me. Adjustment number 2, return outwards. What does return outward means? Purchase return had been debited to purchase account. Okay. So first effect of this is purchase. That means debit was more. If debit was more, what will I do? So I have to do purchase credit. That means I have to do expense credit. Yeah. If I have to do expense credit, that means I will increase it, increase my profit. Understand? Return outwards. Return outward is an expense reduce. Okay? It has been debited to purchase account. That means expense is debited more. Okay? Expense is debited more. So to rectify it, I need to reduce my purchases. So expense will be credited. If expense credit, income credit, what will you do? you will increase the profit. So for this part, I have to increase my profit by how much? 570. I hope you're with me. But it was actually a return outward. It was actually a purchase return. So I had to actually reduce the expense, which I did not do. So I will do it again. I will do what I did not do. Okay. So for this, for giving the actual treatment, I would again add 570. So this 570 is added to rectify the wrong that you did. And the other 570 is the one that you actually had to do, but you did not do. Purchases have what balance? Debit balance. Purchase returns has what balance? Credit balance. There is another rule to it also, if you remember from control account GPT, control account reconciliation. If you put the right amount in the wrong side, you do the rectification correct side, double the amount. Okay. Now understand this. You had your purchase returns, which you had to treat. Purchase return was a credit balance. You had to write purchase return in your PLCA which side? Okay, forget it. Purchase return has which balance? Credit balance. So you had to write 570 on the credit, but you treat it as purchases, so you wrote it on your debit. Okay? So you write it on the correct side, but which amount? Double amount. So 570 plus 570 for correction of return outwards. I hope you're with me. Our third adjustment. Now this is a bit tricky. Distribution costs includes a payment of 4320. This was for advertisement for 3 years, and the 3 years is ending on 31st of March. Okay? God bless me, I'm sorry. Okay? Whenever you have some payments ending on some date, the thing that you go and see is your year end. First thing that you go and see. So I see my year end is 30th June 2024, and I have made this payment up to the 31st of March 2027. This 4320 is for 36 months. Yes, this 4320 is for 36 months. That means the expense per month is $120. I hope you're with me. Okay. So I will count my years. It is paid up to 31st March 27. Okay. This is the last year. So I write 2 years above. 31st March 26, 31st March 25. It is paid up till year. Okay. So I write the 2 years above, 31st March 26, 31st March 25. I hope you're with me. Then I write my start of the year. It starts April 1, 26 to 31st March 27. This would be 25, 26, 24, 25. I hope you're with me again. It is 1st April to 31st March. Okay. The year starts from 1st April, ends at 31st March. Starts at 1st April, ends at 31st March. If you don't know from the year end, you just add 1 to the month to get the starting month. Okay. Add 1 to the month and subtract 1 from the year to get the year start. Okay. Are you with me? Now, this is the year that I am into. This is my current year. I have paid up to what date? 30th June. I have paid up to year, but my year is ending on 30th June. That means expense for the year is only April, May, and June. Only 3 months is expense for the year. That means I have prepaid 3960. I hope you're with me. I hope you're with me. Now I go to the question. The question says that distribution cost includes 4320. I had to include how much? I had to include 360. I included how much? 4320. My expense was 360. I included 4320. That means indirectly I am saying that the expense is overstated. By how much? Expense is overstated by the prepaid amount 3960. So to rectify this, I have to rectify this, I have to reduce my expense. I have to reduce my expense by how much? 3960. If I have to reduce the expense, debit, decrease, credit, expense credit. The rule says what? Income credit, expense credit, increase your profit. So I would increase my profits by that amount. Okay, so I start from the draft profit and I arrive at the revised profit. This profit will go where? This profit will go where? SOCE, which section? Retained earnings and total. Very well. The second part of this question is preparing an SOCE, which is again a tricky part. I'll give you 5 minutes to try it yourself. So my question was, I had to find the corrected profit. We found the corrected profit. Now they're asking us to prepare an SOCE. Okay. This is the question that they have given us. Share capital is comprising of ordinary shares of 0.50 each. So I know very clearly that the face value of my shares is 0.50. I would expect you to do along with me. And a format of SOCE is given to me over here, which is telling me that the closing balance is how much? Which is telling me that the closing balance is how much? 200,000. Since you're telling me the closing balance is 200,000, can you tell me what are the things that you would think of when you look at this closing balance? The first thing that I would think of is, since this is in dollar value, this represents share capital. You always have to think it that way, that since it is the dollar value, you have to think of the share capital, and your share capital comes with this formula. The formula is number of shares into face value will give you share capital. From the share capital, you can find the number of shares with you on the last date. So on the last date, the number of shares with me is 200,000. Face value was how much? 0.50. So on the last date, the number of shares with me was how much? Okay. Please keep calculators handy with you. 400,000. Anything, understand your SOC always has the dollar value, it has the capital value. To find the number of shares given to you as bonus, to find the right issue, to find the interim dividend paid. And if any dividend is paid in the form of per share, you need this number of shares. The place where major kids get confused is in the number of shares and dollar value. Dollar value is the capital. Dollar value divided by the face value is going to give you number of shares. I hope you're with me. So I have the number of shares with me on the last date. Do I have it on the first date? Do I have the number of shares on the first date? We have on the last date, no problem. Now our first transaction. My first transaction says that you pay. You pay, that means I'm going to pay a final dividend of 0.05 per share on all the shares in issue at that date. So all the shares in issue at that date would be this one. I don't have it. Do I have it? Since I don't have it, I am clueless about what should I put in final dividend. Yeah? Okay. So in that case, I go and move to the next adjustment. The next adjustment tells me I have made a bonus issue of one ordinary shares for every 7 held at that time. Okay? And I am going to use the reserves in the most flexible form. So we do this bonus issue over here. Please look at my screen. It is going to be one ordinary share for every 7 that is held. Okay? Are you with me? So the total after bonus would be 8. Are you with me? If people had 7 shares and I am to give one ordinary share as bonus, so total after bonus would be 8. This question would have been very simple to me if there was no other issue for me. I would say that this 8 represents 200,000. What would the bonus represent? 200,000 into 1 divided by 8. We do cross multiplication, right? 1 question mark. If 8 represents 200,000, what would the 1 represent? If I had no other issue, this would be as simple as anything. But here is an issue. There is an issue over here. What is the issue? That issue is also there and the other issue is also there. Okay, so bonus is 1 share for every 7 held, so the total becomes 8. But they're not stopping over here. They are giving an interim dividend on all the issues at that date. That means interim dividend is going to be paid on what shares? Interim dividend is going to be paid on this and this. Are you with me? But I don't have the bonus. I don't have the original shares also. I don't have it, right? Okay, I read ahead. On the 31st of March, I have made a right issue. Right issue is how much? 1 share for every 4 held. Okay? So if I go and erase all this for my bonus, I know that after my right issue is 1 share for every 4 held. 4 includes my opening and bonus. So my total number of shares after the right issue would represent 5. Look at this thing over here. I have an opening balance which I do not know. After that, I made a bonus issue which I still do not know. After that, I made a right issue, but now I have my closing balance and I know that the right issue is going to be one ordinary share for every, how much held? For every 4 held. This 4 held includes the opening and bonus. So one ordinary share for every 4 held. So I would get my closing balance as 5. Yeah? Are you with me? Haris, are you with me? Okay. Now I can find my right issue because I have a clear thing. 4 held. 4 held includes the opening balance and bonus issue, which I don't know. Do I know or I do not know? You don't know. But can I make this combined as shares held before the right issue? Can I make this combined as share held before the right issue? Yeah? So that means I am giving a right issue of 1 share. For 4 held, my total becomes 5. If 5 represents 200,000 in dollar value, what would be my right issue? Question mark. What would be the number of shares held, including bonus and right question mark? How would I find it? Can you tell me? Cross multiply. So 200,000 into 1 divided by 5 gives me how much? 40,000. And 200,000 into 4 divided by 5 gives me how much? Are you sure? Sure. 160,000. But this is all in the dollar value. I want it in the number of shares. So it will come up to how much? And the next one would be 20,000. I hope you're with me. 80,000? Right issue is 80,000. Okay, fine. Now let's sort out with the right issue. Let's sort out with the right issue. Read this. Made a right issue of 1 ordinary share for every 4 held at a premium of 0.20. 80,000 into face value would give me something that would go in the capital. How much would go in the capital? 40,000. And 80,000 into the premium value. How much is the premium? 0.20 is something that would go in the share premium. Share premium, 16,000. So when I am writing it in my this over here, for right issue I'm writing 40,000. For share premium I'm writing 16,000. So my total would become how much? So my total would become 56,000. I hope you are clear with me. Am I clear? Okay. Now I have already done the right issue. Are you with me? I'll go to the bonus issue. I know the number of shares held with me before the right issue was how much? For the bonus issue, I make this like this again. Can you read the bonus issue for me, please? Okay, fine. Do I have the opening balance? No. Do I have the bonus? No. But I know that after adding my opening balance and the bonus, I would get how much? Okay. I want you to try and think and work out. I have the right issue and I have the closing balance. Bonus is how much? One ordinary share for every 7 held. So the total would become 8. Please try it out. So our sequence goes this way. We had our opening balance. We have our bonus issue. We have our right issue. And we have our balance closed down. Right? Please write along with me. I have my balance begin down. I have my bonus issue. I have my right issue. And then I have my balance closed down. Are you with me? Right issue is one ordinary share that I'm going to give. Okay. Yes. Bonus will be one ordinary share that I'm going to give. Yeah. Okay. So opening balance would be how much? For the bonus issue, I'm giving one ordinary share for every 7 held. Yeah. Hello. For the right issue, I'm giving again one ordinary share for whatever held. But the right issue would be 1. Okay. Okay. So the total number of shares would become how much? 7, 8, and 9. One ordinary share was given as right. Yeah. One ordinary share is given as bonus for every 7 held. One ordinary share is given as bonus for every 7 held. After that, you give one right share. You gave what? One right share. So your total number of shares becomes 9. Okay? Why? 7, 8, and 9. 7, 8, and 9. So we establish the ratio to get the right? But still, if I'm calculating the total, one share was given as bonus for every 7 held. One share is given as right. So 7 was held, one bonus, one right, balance close down becomes 9. Okay. Now if I say this 9 represents how much? 200,000 in dollar value. Yeah. So what would the 7 represent? Check. 200,000 into 7 divided by 9. 200,000. 200,000 into 1 divided by 9. So it's not coming. So we did a mistake over here. We tried that and it came wrong. Okay. We know that opening plus bonus was the held when we found out the right issue and we got it as 16,000. 160,000. Now I take this ratio. I say my opening plus bonus, the total is 160,000 in dollar value. And if you talk about the number of shares, it's going to become 320,000. I hope you're with me. Okay, fine. So if I add the opening and the bonus, okay, what is the ratio for bonus? What is the ratio for bonus? I give one ordinary share for every 7 held. Okay. I give one ordinary share for every 7 held. So the total becomes 8, which is opening plus bonus. This 8 represents 160,000. So how much would this 1 represent? How much would this 7 represent? 160,000 divided by 8, which was 20,000. And 160,000 into 7 divided by 8. So this would become 140,000. Okay. I don't need the number of shares over here. For bonus, I can directly, remove this amount from where? Bonus issue. It is how much? 20,000. I'm going to remove it from the share premium. And by opening balance is 140,000. I hope you're with me. Okay. I need 140,000 divided by the face value for my opening balance. It's 140,000 divided by the face value 0.40. So I have 280,000 shares. And I was giving final dividend how much? 0.05. Yeah. So final dividend 280,000 shares into 0.05. It's 14,000. Where will I give my final dividend from? No, I will give it from the share premium first. Okay, I'm sorry. I'm gone mad today. $14,000 from the retained earnings and 14,000 from the total. How about the interim dividend? 2% on all the shares on issue at that date. No, just look. 2% on all the shares held on that date. So 140,000 plus 20,000. So it is 150,000, but I'd have to give it on all the shares held on that date. So the number of shares would be how much? 150,000 divided by 0.50 is okay. 160,000 divided by 0.50, it is 320,000. How much interim dividend I'm giving? What is the question telling? So you will give interim dividend 2% of what? 2% of the face value. Yeah. Face value is 0.50. So I'm going to give interim dividend of 0.01 per share. So 320,000 into 0.01. Am I giving interim dividend of 3,200? Am I giving interim dividend of 3,200? Okay, very, very good. We will minus 19,200 from here and we will give 800 from the retained earnings. Very good, Mahad. Okay, now the last part. A revaluation reserve. What is a revaluation reserve? I need you to understand this very carefully. Please over here. When I have a non-current asset, okay, whose value normally appreciates or depreciates, it can be anything, and you revalue these assets, and you have a reserve in your question, which is a revaluation reserve. Okay, that means anytime you are going to value these assets, you are going to adjust this amount. I'm talking something very serious. You're going to adjust this amount from your revaluation reserve. What does this mean? Normally, when we use an asset, we have depreciation. Depreciation is a charge of using an asset, and we write this depreciation as our administrative expense in the income statement. This is what we normally do. Okay, we are reducing the value of the non-current asset because we are using the non-current asset and we are charging this depreciation in the income statement. I'm reducing it because I'm using the asset. But if I reduce or increase the value of my asset because of revaluation, I have a profit or loss that I make on revaluation. What do I have? A profit or loss that I make on revaluation. Please note, any profit or loss made on revaluation becomes a part of your SOCE and your non-current assets. Let's take for an example. If I have a revaluation reserve of 60,000, I have revalued my asset downwards by 30,000. What will I do? I will subtract 30,000 from the revaluation reserves and I will reduce my non-current asset by 30,000. Are you with me? I have another case. I have 60,000 in my revaluation reserve. I have revalued my asset upwards by 155,000. What will I do? So I have revalued upwards by 155,000. So I will add in the revaluation reserve 155,000 and I will increase my non-current asset by 155,000. I have a revaluation reserve of 60,000. I have revalued my asset downwards by 90,000. What will I do? We'll subtract 60,000 from revaluation reserves and I will subtract 15,000 from retained earnings. Please note, there is a loss on revaluation of asset. Okay? You might make a mistake by writing 90,000 in your income statement that it is revalued downwards and treated as a depreciation. Another type of mistake you can make is you would say, I have used my revaluation reserve and I put this 30,000 in the income statement stating that I have made a loss. No. In the income statement, nothing will go. You remove it from your revaluation reserves. From your retained earnings, this 30,000 that you're showing would be a part of your SOCE, or it could be a part of your equity and liabilities. And the second effect of it is your non-current asset reduces. I hope you're with me. So now here your question is saying property was revalued downwards by 8,000. What will you do? Okay. This part that you get over here will be what? This part that you get over here will be your shareholders' funds, that is 275, 540. So the question that they asked you over here was calculate the value of your ordinary shares on 1st July 2023. How would you do that? Just write this. 1, 2, 3. This plus this gives you this. It's for 3 marker. Be mindful of it. And then they ask you to prepare your SOCE. That is the only thing with this question, and this question was a real tricky one when it had to calculate what? The bonus issue, the right issue, and opening balances. All three figures were missing. October, November 24, paper 22. Okay?